We are on a live trade here on crude oil. We had our first trade. We had a event that we had that we recorded, and I switched over to a live event instead of a pre-planned event. So this is the second part of the weekly crude oil inventory trade. The first one was a losing trade. We got 4 ticks of slippage on the entry. The second one is we're currently in it. And so I'm trying to make sure I can see where I'm at on this. I'm trying to find the live streaming on another computer. Oh, there it is, live now. So I'm watching it, and it is showing up as live. And so maybe this one will work out. You can find the commentary for the first part of the trade in the event that we created. And I have a bullish perspective on this market, so I don't know if these short trades will work out today. A little bit skeptical of these short trades. Also, the first bar popped up at 10:30. Doesn't usually do that. It usually stays flat at 10:30 and then breaks out. And so that gives a greater advantage to a breakout on the short side and a less advantage to a breakout on the long side, because we're adding 30 points to that 10:30 close. And so if you add 30 points to that 10:30 close and it's at 45.24, then you buy it at a higher price and short it at a higher price than you would if it was down here. And so you can easily get, if the market has a bid in it, you're going to easily hit those short trades on any pullbacks, versus if a 30-point breakout from here, it happened up here, because it's like the market, someone made it anticipated the move higher. Sometimes that can be a giveaway if the market moves before, if the market makes a move before the event, before the news release. It could be smart money, it could be dumb money, and that can also tell you that the trend, even though it wobbles around right here, it could be the trend. And so this could be another losing trade, because I don't like the short side right now after the moves we had last night. And so here are the moves that I'm talking about last night. There's a petroleum, there's a drawdown in inventories, and so the market just chugged higher. It was a vicious move off of yesterday's lows. And so, but crude oil can have, big pullbacks, and so it can be 100% retracement. So we're just trading the system from algorithmictradingsystems.com, and first trade was a loser with 4 ticks of slippage. This trade is minus 2 ticks of slippage because the entry price is 44.94 and we got filled at 44.96. And so we will see here. I anticipate getting stopped down on this trade as well, but we're following the system. And so we have a 30-minute window, 11 minutes left on this. A lot of hemming and hawing on this market. It's just, trying to run the stops below 45 before it moves higher is what I anticipate. And so that's the hard part of system trading, is when you anticipate higher moves and your system does the opposite. It's not a fun place to be usually. So probably gonna get stopped down on this trade as well, or not. We'll see. You can sometimes you can add to your position if you're going to trade 2 contracts anyways, or 3 or 4. You can add to it as it goes against you. Average in your price. That's more of a discretionary approach. But we have a 30-point stop loss, 70-point profit target, and we'll see. First trade's $300 loss, and we'll see. You can trade multiple times within this 30-minute window, so you might want to limit the number of entries that you take if you have this strategy. And again, it's algorithmictradingsystems.com. It's interesting to see these markets. They seem to be more defensive from preventing. They seem to go down fast. I mean, this is true trading. Markets go down fast and up slowly. but there's this constant fight in the stock market. When the market goes down, they pop it right back up, and seems like it's the same in crude oil lately. Because if crude drops, it's going to affect the stock market, and so quick drops get bid up. And there was a slow downtrend earlier this week, but once they decide they want it to go up, then it's a quick recoveries on these dips. And so I'm bullish this market in the swing trade, on a swing trade basis. Day trade, anything can happen. Anything can happen. You can be the biggest bull in the world and be right, and then have a short trade that makes $2,000 per contract in the middle of that long-term trend. And so these are live trades and they're real accounts, and so you could see the closed profit and loss and the cumulative profit and loss in the book trader. I like green, so hoping for a bigger pullback than a rally. Pullback to the downside, that is, from last night's rally. Again, last night's rally, you can see there was some really big moves yesterday. You know, it made this low down here at 40 near 43, and then move up 3, and then big pullback. See, this is what I'm talking about, 44.40 to 43.50, 90 cents. So you can have easily have $1 pullbacks. And so then I made another move higher on an inventories report. This is 1, 2, 3, 4. That's the last surge right there. It ran out of steam, and it just kind of floated higher. And 1 minute before the report, it went higher, and then it went. Now we've gone as high as 44 or 45.49 and low as 44.50. So crude oil is notorious for having wide swings and wide pullbacks, and so, but every now and then it gets in strong trend mode too. So we'll see how this trade turns out. Again, the stop loss is at 45.24, and we're trading the strategy from algorithmictradingsystems.com, and we are bullish, and so both these trades could get stopped out today. I'm going to show you the method for trading the weekly crude oil inventories on this, though. There will be a recording of this. And so we've got 6 more minutes left before the breakout window ends, and what that means is at 11 o'clock there will be no more entries, but the trade will still be on until the 2:30 p.m. Eastern Standard Time close, and it has a $300 stop loss per contract and a $700 profit target. And as you can see, we expand our chart. We got stopped out on the first trade. Take a look at the hypothetical performance summary on this. And there are good results, but it goes through drawdowns. This equity curve looks great, but this can be painful for most traders. 66.30 down to 47.30. That's almost $2,000 per contract. And so even a great equity curve has losing days and pullbacks and drawdowns. And so this is from algorithmictradingsystems.com again. And it's worked well for the past, this is the 12-month window. It's worked. This pattern came out 18 months ago, or started working well 18 months ago. We also had the Fed speak today, which might ultimately affect this market. If it affects stocks, sometimes they trade in tandem, not always. They're not completely correlated, but the market could pull back before the Fed report. Most people anticipate no rate increase, Most traders, Wall Street has a low percentage probability of a rate increase. So if there were a rate increase today, it would shock the market, supposedly based on what most people anticipate and what most people believe they would do if there was a rate increase. That is not in the market. And so this pullback, the pullback in equities and stock index futures could make crude oil pull back as well. And so again, here's the hypothetical performance report of the trade, the model that we're trading. Less than half the trades are winners, but the average largest winning trade 700, largest losing trade is 300. Ratio average win to loss is 2.22. Again, about a $2,000 drawdown. And so you see, it comes to this 45 level and it just wants to rally. It keeps wanting to rally off of 45, but we'll see what happens. Maximum consecutive losers is 5. Last week, let's look at last week's trade just a little bit here. Last week's trade. Where is it? Here it is. We got stopped out on the long side and it reversed and made profits on the short side. And so the profit was a $700 profit and the loss was a $300 loss. And the week before, huge gap up. Intraday, you usually don't see that much of a gap up intraday, so the market was shocked and surprised. And you see, that's why we don't get in on the first bar for this strategy. See if I can find that bar here. You see, we don't get in on this 1031 bar. No, this was the week that the Labor Day week where we changed the inventories report came out on Thursday instead of Wednesday. So this was on a Thursday, and the report came out at 11. And so we changed the window from 11 to 11:30. But you see this, the first bar, like today, the first bar, the bar before the report moved higher. And today, I mean, on this day, on September the 8th, the bar before the report is just kind of in a sideways price action. And so then it was shocked. And so maybe it's a machine learning algorithm of from this trade that the market moves higher on the report. And so they got a running start and bought it up early. The previous week, let's find some more trades here. Short trade, $700 profit target. Short trade, just got out at the end of the day. We actually get out at the minute before the close, and it $280 profit. Did not hit the profit target. So you can get out at the stop loss, the profit target at the end of the day. Winning trade here. Another one that got out at the end of the day. 48.24. Okay, the window for breakouts are over, so there won't be any additional entries. But we'll hold this trade again and see if it's a winning trade or a losing trade. There's a little bit of delay. I'm seeing a little bit of a delay from what I'm seeing and what is on YouTube. So 44.77 is where this exited, and profit of 180. Here's another trade. We saw this before. Long and then short. We don't usually see a scenario like today, and it's that first bar that moved higher. The bar before the report came out moved higher on us, like the report had already come out, like someone had knew about it in advance or was guessing what it would be. And so you usually see, a scenario where you have a long and a short trade, where if there's two trades in the same day, there's usually a long and a short trade, not usually two short trades or two long trades. And when you have two trades, they could both be winners. It's unlikely that it will move that far, because for it to be a winner, it would have to go up 70 points within a 30-minute period and completely reverse 100 points to get another trade on the other side. So usually when you see two trades, one's a loser, one's a winner, or both could be losers. We've had that scenario as well. See if I can find a scenario. There's a long trade that's a winner. Let's see. Here's a scenario. Two losers. Short trade, long trade. Boom. Lost on both those. So you can have two losers in the same day on a short and a long. Let's see if I can find a trade where you have two losers in the same direction. There's a short trade. Short trade. Here's a short loss and a long win. Here's one that just got stopped out. There's one trade and it just got stopped out and then was done for the day. Another trade, short, profit target. And you can have two, actually you can have two in a row because it's below this breakout point. You could limit this to one trade per day. So you can have two in the same direction that are winners, because once you hit your profit target, you'll, this is one way we could modify the code is to not use the profit target if it's in that first 30-minute window. This is on a Thursday when we have 11 to 11:30 window. And so one way we could modify the code would be to not have that profit target if it falls within the 30-minute window. So looking at some other trades here, trying to find a historical trade where we had two losers in the same direction. There's one winner, one loser. One winning trade. One losing trade on the long side. Just going over all these trades over the past year. It's a long trade that was a winner. This is the weekly inventories report strategy. And we're currently short, and we got short again. Or we had one loser today already, and this could be a second loser as well. It's a live crude oil trade. Is a long trade that's a loser. We're trading the algorithmic trading systems strategy here. And we're taking a look at these historical trades along this equity curve. So we're going back. This trades on Wednesdays and it does trade on Thursdays. So this is back to May 2016. There's a short trade that's a loser. Okay, here's a historical situation where there were two short losers. This looks a lot like what today may turn out to be. If this market doesn't move to the downside, we could have two losers today. This happened on May 18th, and it got short here at 41. Let's see what happened here. Here is the 1030 bar. The 1030 bar did not move have a big move like it did today. The 10:30 bar Eastern time had a big move, and so it put the short entry closer to the average prices before the report than afterwards. And so 1024 is our stop loss point, which is a $300 stop loss. Our entry was 44.94. Hypothetical entry is 44.94, but the market bounced back and we got filled at a better price on this second trade. Two losers in a row back on May 18th. Short at 51.51 got stopped out. Short at 51.51 and got stopped out. So here's a short trade. Again, Janet Yellen and the Fed have the meeting announcements at 2 o'clock Eastern time, which is 3 hours from now, which lends itself to kind of a dead market between now and then. Here's a short trade on May the 12th. Again, this is our first live event for this Crude strategy, and so would like to have had a couple of winners or a winner or a better result, but this is the first live event. We've had a winning streak, and then we start recording this, and we have a couple losers or potentially losers. This could turn around and still be a winner today, but it's only 10 points away from our stop loss, and so probably get stopped out. Two winners in a row here back on May 11th. Here's a short trade that's a winner. Here's a long trade. Short trade.
Order filled.
All right, we got stopped out on that, so it's two losers in a row today on our first live event, and so we wanted to basically show you this strategy, how it works, and give you the live trades on that. So you have to think about it long term. You see the report. Let's refresh this report, and you'll see the results. So this is what it looks like in the equity curve. Two losing trades in a row, $600 off the equity peak. And so there you have it. Again, we had two losing trades similar to those on May 18th. And there they are. And again, this is from the book algorithmictradingsystems.com. And there's days when you have two winners, days when you have two losers, and days when you have one winner and one loser. And so there's different combinations of what can happen. And today we had two losers. So that's the live trade. Thanks for joining us, and hope you learned something from this video, as we don't hype this, and I like to show losers as well as winners, and not just show winning trades all the time and hype. So that's it. Thanks for joining us.